Hey guys, how are you? Andy Sukhu, founder and CEO of Y2K Credit Solutions. And usually I'm here talking about credit, videos of my clients' testimonials. Today I'm here to talk to you guys about a special topic. And because of that topic, I had to bring in my good guy, my good friend, Stanley Yee. He's my financial advisor. How you doing, Stanley? Good to see you. Thanks for having you. First time Stanley's coming to the office finally. Anyway, today the topic is about savings. Savings. What's savings? Stanley, what's savings?
A lot of people don't know, but in America is actually the worst country in savings.
Hold on. Say that again.
Americans are actually the worst at savings.
That's correct. You heard that. He said he's the financial advisor, and he's telling you that. Go ahead. Let's talk about this.
All right. When it comes to savings, a lot of times, general rule of thumb we like to say is keep 6 to 8 months worth of expenses in cash. That's your rainy day fund. You want to think of your savings as first with what you have is for emergency. Anything outside of that, you want it to work for you. So that's kind of what Andy and I have been working on. And then when it comes to planning. Savings is important, and in addition to that, what you do with your savings, that kind of dives into what I do for a living, and so that's something that we talked about and we wanted to bring out to you in terms of educating.
So Stanley said a good thing. He said 6 to 8 months of savings, but that means in a bank account, not in a shoebox, right? In a bank account, even though you're not making a lot of interest on there, park it in a bank account or a savings account because it's secure there. It keeps you from spending the money at any given time, right? It's a buffer. The bank's not open every single 7 days a week. So sometimes we have splurges where we want to spend money. You run into the bank and we pull the money out. Keep it in a bank account, not in a shoebox, because when it's in a shoebox, it's very accessible to you.
That, and if I could chime in, like physical risk, anything that happens with the shoebox itself.
That's correct. That's correct.
Or where the shoebox is, right?
Yeah, that's true.
Fire sucks, but it's reality.
That's correct. And also, he also said a second thing. You can use it for planning. Now, that's a very interesting point he made, because if you have bad credit and you're living from paycheck to paycheck and you have debt, you can't save. Therefore, you can't plan for the future. And we all hear this saying of let your money work for you, right? While you're sleeping. Everyone hears that statement every single day. And I believe, Stanley, that comes from savings, because unless you have, and correct me if I'm wrong, this might be different for everyone, but I personally believe that, and I tell my clients this, unless you have 6 to 8 months of savings, you shouldn't be investing in anything because you don't have a security nest for yourself. Is that correct, or is that a statement?
Yeah, I think that's fair to say. I think everyone should have some sort of, think of it as an emergency reserve in the event that, because I always tell clients that life happens at 100 miles an hour and you just don't know what's going to come next. So you want to be prepared. And part of that is having, I always tell clients that you want to think of it in different buckets, right? You've got your short term, which is that immediate need. That's where the savings account comes in. You've got your midterm, and then your long term. Long term being retirement, something maybe 20 years down the line. But your midterm could be something that you're saving for, maybe like 5 to 10 years down the line, whether it's buying a house. Correct. Or buying a car or buying a second property, whatever it is. You want that money just to grow and work for you, as Andy said. I always tell clients that you work hard for your money. You want your money to work for you. That's
correct, and that's how it starts, by saving, so you can put extra money into a retirement plan. One thing I wanted to ask you about, Stanley, and you said it just now, was that is it safe to say, right? Even if you have a perfect credit score and you go into a bank and you want to take a loan for about $100,000 or $50,000, the bank would require to see some sort of liquid cash in your bank account before they extend that money, even though you have good credit?
It's safe to say that, yeah.
Okay, so guys,
just like a house needs a down payment, that you'll need some sort of reserve for that.
That's a good point. So not only the savings help you leverage the bank's money, if that's the right statement to say, I think it's safe to say that, but savings is very key, especially living in America, living in New York City. It's super, super expensive. I know that. Stanley knows that. It's expensive to live in New York City, and I think 90% of our people that live in New York City are living check to check, and that's how you end up in debt and financial hardship, right? So, guys, it's 2019. It's the third month into 2019, and if you're not savings, try to put away something. $5, $10. It adds up. It adds up, and when you get into that 6 months of saving cushion, and you're able to, you feel secure, the rest of the money, reach out to my guy Stanley. He'll tell you exactly where to park it, where you can make some interest, or let the money work for you overnight while you're sleeping. So, this topic was about savings, and I hope we kind of gave you a very quick insight on how important savings is, especially in 2019. Anything else you want to add to this, Stanley?
No, I think you and I both agree that we're excited for this year. I think
Absolutely.
It's like you said, it's March already, so first quarter's coming to an end.
That's correct.
The time to act is now. So
one thing I want to say, and I tell all my clients this: at the end of 2019, you should be able to look back and say, "Hey, I did something positive financially, or to help myself go to the next level in 2020." And if you can't safely say that at the end of 2019. That's an issue, So, guys, savings, it's save, don't spend. Debt elimination, asset accumulation. That's the terminology for 2019. That's the vibes right there. All right, talk to you guys soon. If you have any questions, and you guys seen this guy a lot on my personal page. He goes around with me to a lot of places, but I trust him with my money. He puts it where it needs to be, and I do some nonsense sometimes. Believe you me, and sometimes I need him to put me into reality check. Like, what are you doing? There's no value in that. There's no return in the money with that, So we're here to help you guys. Any questions, DM us. The information's on the bottom here. Call us, reach out to Stanley, and we're here to help you guys. Talk to you soon.